Hey, it's been a while since we've done a video. We wanted to do it in the new office and obviously update people with the craziness that's going on in the market, in the world, and the economy. It's been a rough couple of weeks and a rough start to this week, Quint. So can you give us a little insight of what you're seeing?
Yeah, certainly. Hopefully you've been catching up with what we've been writing and following this sell-off and sort of market volatility as things have transpired. You know, I like the fact that we have already taken steps to position in a little bit more defensive nature. I know we've talked about this ad nauseum, so we don't need to talk about this, but I did have a very astute client who reached out and said, you know, you're talking about cash and you actually own a bond fund, and that's not cash academically. And he's right. So I want to stress this, that when we took positions off at the middle and end of last year and then trimmed some of our gold position this year, we parked that money in an ETF, exchange-traded fund, that owns 7 to 10 year treasuries. Now, we did that intentionally.
Yes.
In fact, if I were to do it again, we would have done a lot more. You know, in hindsight, I wish we would have done more. But nonetheless, our view at the time was removing positions from areas that were, in our opinion, extremely overvalued and extremely stretched, albeit, you know, primarily the big cap tech. And then the fixed income market was in such a place where the yield was very attractive, approaching almost 5%. But in our opinion, whether the market came down or the Federal Reserve was able to lower rates, would bring interest rates down and therefore increase the price of that bond fund. So that's the rationale. I just wanted to go into that. Now, what is happening? Well, a lot has changed in the last few weeks regarding, you know, the president's initiatives primarily surrounding tariffs. And this is what is really sort of concerning the market and has them in a little bit of a tizzy. I mean, if you no other, that's not an academic word, but it's not so much the tariffs that are going into place or are set to go into place or increase in April. It's the uncertainty surrounding how much, with whom, with what products, etc. And that's becoming increasingly difficult for management of these companies to make adjustments. Many people saw GDP, the projection of first quarter GDP, revised lower considerably. I want to caution people that when you look at that, or when that prints and it ends up being quite negative, it would be easy to go, oh, that's it, we're doomed, we're in big trouble. Well, what that is there was a report by Goldman Sachs that put out primarily businesses in an attempt to get ahead of the tariffs were buying a tremendous amount of products, and ultimately, because they stocked that inventory, they didn't have to buy products again. And so that is primarily a drop-off in the products that were bought ahead of tariffs. So it's hard to sort of, you know, dissect that and go, oh, things are terrible. Markets are volatile. Stock prices are down. Volatility is a fancy word people use for when stocks decline. I never like to make light of that, ever. It's never fun opening an account and seeing things down. However, this comes with the territory. And after 2 very strong years, it was a matter of time before we saw a big pullback, and that's what we're seeing. I don't find this to be the time where we're seeing a significant economic change in the environment. Now, we could be wrong. We reserve the right to change our mind on this. But we're more inclined to be looking at the bond position that we have in our equity side, by the way, and looking to put that back to work, buying at lower prices. And the reason for that is we still have a Fed that's lowering rates. The economy is generally strong, and we still have incredible innovation in the AI area that will create greater profits and ultimately greater earnings for these companies that are implementing the AI now. So I have a hard time getting too bearish here. It's not fun. I don't like it. But we're also not jumping in and putting this capital to work either. So it really is a time to wait and see. I never like those times.
Right.
I never like being patient, but it is truly a time, or at least we're doing, to wait and see, be patient, and see how this all plays out.
Yeah, because there still is a lot of uncertainty out there, and it's kind of trying to find that direction. I think if there is more certainty, the companies will kind of adapt because of the things that we're talking about, the innovation, some of these other areas that are looking promising for the future.
And markets typically tend to overshoot in one direction or the other. It would not surprise me at all if we overshoot to the downside in this particular correction. How do we know that? Well, we would be looking at the fundamentals, the actual fundamentals or earnings, sort of multiples or so forth of various areas. So even though there's times it's like, oh, this is uncertain, we don't know, we're going to wait for certainty, nobody will ring a bell at the bottom nor the top.
Right.
And so we'll try to pick our places and look at areas that we are interested in, that provide value, but are at a price that is going to be hard to pass up. I mean, when I go to the grocery store, if I don't, even though I might not need meat, if it's 50 or 75% off, let's hope the stocks don't get that deep. But
right.
when it's significantly deep discount,
You
I
buy
bring it home and I put it in the freezer. Stocks and investments are the same way. So there could become a point here in this sell-off where we get to a level where it's just too cheap for us not to move in. But again, we have to wait and see.
Yeah, exactly. We're going to wrap it up there. Thank you so much for watching. Please read all of our content. Share it with your friends or family so they can learn a little bit more about what's going on in the world too. But as you can tell, we're in a new office. So for those of you that do not know, we are now in Beaumont, right across the street from Kroger, 3rd floor. We're, we love it. We miss American Avenue and the kind of hominess of that, but it's been great so far.
Yeah, it's a great
we're going to work on our studio. I need some work still, but we'll get there for sure. All right, everybody have a good week out there.